In this week's episode, we look at the Zambian soy meal market and discuss whether the drought can result in Zambia to become a net importer this season. All in this week's episode, so make sure to stay tuned. Hello, Dr. Johnny van der Merwe here, and a warm welcome to another episode of the African Agri Overview, thanks to the support of Zimmatic irrigation systems and Comdi grain trading. Zimmatic's pivots and lateral move systems are truly cutting edge, combining top-notch components, exclusive designs and innovative features for a reliable, long-lasting agri solution. Firstly, looking at the Zambian poultry market, we have seen day-old broiler prices trading sideways on 16.50 Rand kwachas per head, while day-old layers increased to 21 kwachas. Layer cull prices also increased, trading on 73 kwachas, while live broilers increased sharply to 120 kwachas per head. The average egg price, however, decreased slightly to 57 kwachas per tray. Looking at the latest grain price movements, we saw the maize price losing about 2% to $365 per ton, while the wheat price also decreased by 9% to $460 per ton, mostly due to the government waiving import duties. The soybean price gained 13% to $560 per metric ton, and soy meal prices increased by 18% to $570 per ton as a result of the significantly smaller soybean crop size expectations. But with that said, let's jump straight into the latest news on the grain markets.
Good day and welcome to all our viewers. This week we look at the Zambia soya market, usually an important supplier of soybeans and soya meal to the region. However, this year will be different due to an exceptionally small expected soybean crop. Before we continue, it is important to note the Zambian government stopped issuing export permits for soybeans and soya meal since March 16. Zambia permits valid for 30 days after issue date, so bean and meal exports still possible until mid-April. This talk government might extend for another 2 weeks to give crushers the opportunity to honor all their export contracts. We do not expect government will resume issuing export permits soon. Let's now focus on the 2024-25 soybean marketing year, running from April 2024 to March 2025. Since our last Zambia soybean discussion end of February, crop forecast declined further. As indicated before, crop size expectations significantly down on last year due to a material loss of planting area to maize and a dry spell in the central and southern regions from mid-January to mid-March, which had a significant negative impact on rain-fed yield potential. Most crop estimates now range between 150 and 250,000 tons versus last year's crop of around 670,000 tons. This table illustrates 3 S&D scenarios for the 2024-25 marketing year as well as our 2023-24 forecast for comparison purposes. The market estimates 150,000 tons was carried into the 2024-25 year. The first scenario crop estimate at 150,000 tons, the second at 200,000 tons, and the third at 250,000 tons. We expect all available soybeans, carry-in stocks and production will be crushed, i.e. ending stocks will be zero for all scenarios. Our worst case scenario has 300,000 tons available for crush and our best case 400,000 tons. In a country with crush capacity of 1.2 million tons, expect fierce competition for the available beans. The market guessed annual local Zambian soy meal consumption around 200,000 tons, i.e. 270,000 tons of beans. Therefore, our worst case scenario could potentially necessitate some soy meal imports. Zambia is always a net importer of edible oil, but this year import volumes will grow substantially. The next graph shows the price history of Lusaka soybeans and soy meal. The price of both rallied since February as the market started discounting the small expected crop and currently trading at $560 and $570 a ton respectively. The obvious but difficult question is what prices might do going forward. Let's say Zimbabwe imports soya meal from South Africa second half 2024, probably inevitable. Given current South Africa forward pricing for July, soya meal should land in Harare at $620 a ton. If we use the number to calculate theoretical Zambia soya meal export parity to Zimbabwe, remember Zambia export permits not available, we get to around $550 a ton ex-Lusaka, see the red line. Soybean price likely to follow the soya meal price, but this export parity calc is on the lower end of price range forecast. There are observers who feel the $600 a ton level likely to be tested soon. If Zambia needs to import soya meal, not impossible, Indian non-GM could land in Lusaka at around $700 a ton and South African GM at around $630 a ton. See the two blue lines, which could indicate the potential upside. As one observer remarked, this could be a challenging year to take a position. Next week, we will discuss the Kenya maize market, where supply, both local and imports, has exceeded expectations of late. Remember, quality information improves decision making. Contact us for more detailed, tailored information.
Thank you, Jock. A huge shout out to our sponsors, Zimmatic Irrigation Systems and Comdi Grain Trading, for making these videos possible. Comdi is a seasoned grain trading expert in South Africa's dynamic marketplace with years of experience and a reputation for excellence. Comdi leads the way in connecting markets and facilitating grain trading across Africa and beyond. Comdi, your trusted partner in South African grain trading. If you would also like to advertise on these videos, make sure to contact me on the details displayed on screen. I'm Dr. Johnny van der Merwe. Thank you for watching, and remember to tune in next week for more on the African grain markets.